Good afternoon, traders. Do we have any particularly important names after hours today? I don't really think so, right? Jump into the disclosure. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer, and a member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure is the same as yesterday. At one point I got fully out of TQQQ, so it could have been different, but then I got back in a little bit in the afternoon on the pullback, which was probably a mistake, to be honest. But we could talk about it. We could talk about all things markets, because it's what we do. So, quick snapshot here. SPY's down 0.5%, Q's down 1.1%, IWM up 1.4%. So really, today was another rotation day. It could be easy to have not even noticed that it was another rotation day if you were just so focused on the insanity of the price action. That price action in the Qs, especially this morning, was really, really wild. It was just a crazy morning. It was a crazy day. It's been a crazy couple days. You know. It's funny how sometimes, like back in June, I'm complaining at least about how boring the price action was. This market just moving sideways every day. There's no volatility. The gamma's so large. We're so pinned. And then it's like, yes, we're finally getting some movement. And then when you just start getting insanity day in, day out, it's like, man, can I just have a break? Can I just have like one rest day thrown in here a little bit? Like, can we just mix it up where every once in a while I get one of those super boring rest days, and then, you know, some other times I can have some super exciting days and not just either constantly one or the other. But that's just not how markets work, right? Usually, and I think that this applies to markets in a lot of different ways, whatever the kind of status quo is of the market tends to stay that way. So you can view that with trends, right? Trends tend to last much longer than anybody expects. You can view that with a quiet market. The market can get quiet and boring, and the VIX can be dampened down, and that can stay that way for a while. And then when things pick up and the action starts going crazy, a lot of times it's not just one day. It's day in, day out for a period of time of market insanity until it calms down because you get through an event or whatever the actual situation is. But today was really, really, really wild. Really wild. So let's try to recap it a little bit. Let's try to have a review. Let's see if there's any lessons to be drawn from this market. So coming into today's trading session, the SPYs, I think when we were doing the morning meeting, were like $8.50, $9 extended, I think, from the ADMA on the daily chart. And again, just a basic recap for anybody that's new. I like to use the 8 and 21 EMA as tools, where the space between the 8 and 21 EMA is what I consider to be like general market equilibrium. It's like the technical equilibrium of the market. And, you know, markets can move away from those moving averages. They can extend away from those moving averages would be the word that we would typically use. But almost by definition, almost by mathematical law, at a certain point, even though you can extend further than you might expect, you have to get back to that moving average at a certain point. So markets can give really big moves in one direction or the other, which can cause a large degree sometimes of extension away from those moving averages. And again, that extension can become even more extended when there's momentum or there's fear in the market or there's panic in the market. But almost by definition, at a certain point, you're going to have to get a price or a time correction to satisfy the extension. A price correction basically means that in a weaker market like we have right now, that the market moves up. It moves up to the moving averages to satisfy the extension, or you can get a market that moves sideways and those moving averages come back down to it in order to satisfy that extension. So one thing that we've just been able to kind of classify, I think, over the last few years, and it's really been pretty accurate, is just kind of giving like general like extension zones or degrees, where and this really applies with all three indexes, but for the SPYs and the Qs, the numbers have been fairly consistent. Obviously, the index have increased in price a little bit, so you got to keep that in mind. It can stretch a bit, but broadly speaking, if I'm looking at a SPY or a QQQ and the price that it's trading at is less than $5 away from the ADMA, I really don't consider it to be too extended at all. So you should, in those circumstances, really look for continuation in the direction that the market's already moving as a general rule. If you're moving higher, if you're trending higher, and you're not, less than $5 extended away from the ADMA and the SPYs and the Qs, there's probably, everything else held equal, which is a term that I hate, but sometimes you have to use it. Everything else held equal, you're probably going to have the market continue to move higher than actually go down further or reverse. And now we're in a situation where this market is weakened out, and the opposite situation is occurring. If we got to less than $5 away from the ADMA and the SPYs, which we did today, or we get less than $5 extended away from the Qs, which we certainly did not do today, in a weaker market, everything else held equal, there's a higher probability that you would just actually expect the market to move down. The space between like $5 and $9 to $10 of extension in the market away from that 8 EMA for the SPYs and the Qs on the daily chart is typically what I just kind of call the no man's land zone. In the no man's land zone, you don't really have as good of a risk reward probability of success in either direction. You're between $5 and $10 of extension. It's a healthy amount of extension where you can't really push the trade in the same way. So, again, in this case right now, if the ADMA on the Qs is at 475 and we were trading at 468, that'd be $7 of downside extension. If that's where we were trading, I would say, I really don't have a very strong advantage right now in either direction on this market. If I am looking to short here, well, we're kind of extended by a healthy degree, so we could snap back. We could bounce back $7 or $10 in my face as I'm trying to short. So that's probably not a great risk reward for me to push the short when we're $7 extended from the ADMA. But also, I don't really want to buy that either, because we're getting more extended where, yes, at a certain point we'll have to get, some sort of price or time correction to satisfy the extension. But when you're $7 extended, that $7 of extension can easily become $10 or more worth of extension. So again, in that $5 to like $10 range away from the ADMA and the SPYs and the Qs, that's the zone that I just kind of generally consider to be no man's land for the market. And then when you start to get to $10 plus, that's going to be what I consider to be more extreme extension. Where when you get $10 plus of extension, that's actually usually when I would, again, everything else held equal, prefer to look the other way. Meaning once we're $10 plus extended to the downside and the SPYs and the Qs, I would actually rather be looking for shorter term long opportunities to make money off of the satisfaction of extension than look for the actual continuation, where at that point I don't have a good risk reward. But everything, of course, has to be viewed through the eye of risk management. Risk management is the key to success in the business. There's no 100% in trading, because as we've seen with this move in the Qs, which has been extreme, you can have $10 of extension go to $17 of extension. We've probably only seen the Qs get this extended to the downside. I don't know if it's happened at all, actually, since the 2022 bear market. We definitely had several times in the bear market of 2022 where we got to $15 plus worth of extension. I still remember, I wonder if I could find it in the chart, I feel like the worst we saw was the Russian invasion of Ukraine. That morning, we gapped down that morning, and it was a phenomenal buying opportunity where we were, I'm guessing, like $20 extended. That was this move here. There was, and we had it in January too, but here on February 24th, I'm pretty sure that was the Russian invasion there. The low, which is very near to where we opened, is just above 318, and the ADMA was at 343. So that's a very extreme situation. That is $25 of extension away from the ADMA. I feel like that's like almost maybe like the biggest I've ever seen, or very near to it. That's why I remember it so well. So here we are, it really extending down yesterday and then continuing that extension this morning in an insane way. And the news out there is not, in my eyes, not as dramatic as or potentially as dangerous or as bad as like what the Russian invasion of Ukraine was at that time. This is just, it's exactly what we expected. It's exactly what we expected coming into this earnings season. It's the market got ahead of itself on these Mag 7 companies, and the market got worried that the capex on AI is not going to be something that is fulfilled by revenue anywhere in the near term, and they're just having a little bit of an unwind here. And it's a pain trade because everybody in the market's been long Mag 7 and short everything else, and the market just flipped, and it created this crazy pain rotation trade for most market participants. Not really for us, because we were looking for this. We were looking for the IWM to catch a bid. We were looking for the rotation to come in. And then coming into this earnings season, we were saying that this earnings season actually should be able to extend that move, because people I felt were going to be disappointed by some of these earnings. We're still very early. We've had Netflix, Tesla, and Google. Netflix doesn't really matter as much anymore. Tesla matters, but it's in a little bit of a universe of its own. Google is, I feel like, the first really important one. And what did we see from Google? We saw pretty good numbers. The numbers were pretty darn good from Google. They beat on almost everything across the board. YouTube was a little bit light, but the market is worried about exactly what we expected, which is the capex on AI, and it led to some selling in Google, which gave it kind of a nasty day two today, but it really led to an unwinding in everything across the board. And then you combine that with an understanding of positioning, where we know that at certain price point levels that there are systematic trading strategies and funds out there that are forced to buy at certain prices or forced to sell at certain prices. And honestly, understanding the positioning of those systematic funds has become extremely important, because I think that if you had an understanding of that, and we talked about it yesterday morning before the sell-off even occurred, you knew where the CTA trigger prices were, and you knew that once we got past those price points that you should be very, very careful on doing any buying. I still think that shorting at that point was tricky, just because of how extended the market was by the time that those triggers actually clipped, but you should be very, very careful on doing any buying when we're hitting price points where the big boys and girls that are out there that actually really move markets are now being forced to unwind, in this case, what has become pretty much historic long exposure in CTAs and vol control funds. And that's exactly what's happening. It's a forced unwind from systematic funds, while at the same time there's a massive pain trade going on right now from the long short funds who have just been buying Mag 7 and trying to short mid caps and small caps, and they're just getting run over right now in both directions, and that just leads to further squeezes in both directions. So that's exactly what's happening right now. Now, coming into today with a backdrop of all that information, yesterday the SPYs at lows intraday, I think, got to like $12 extended away from the ADMA. This morning, pre-market, when we're doing the morning meeting, they're like $8.50, $9 of extension. So in that no man's land, but very close to the extreme extension zone. The Qs, which are obviously the reason why the market's selling to begin with, and as we know, Mag 7, if you buy, or in this case now sell $1 of the S&P, you're selling, I think, 29 cents of the top 5 companies. So when you start selling those companies, you're going to have a dramatic effect on the S&P and especially the NASDAQ. So the NASDAQ yesterday got to what? $17 a downside extension intraday? It was a really crazy number. We got yesterday's low was 462.50. ADMA was at 479.50. So $17 extension at lows. Today Obviously, the ADMA is going to be a little bit lower because it's a moving average, but very quickly off the open, we accelerated even down further. So at lows today, which happened early on in the trading session, which is also notable how early it happened. Today's low is 455.60, and the ADMA is at right now like 475. So we got to almost $20 of downside extension today, intraday, and it was the beginning of the day, which is especially notable because we came into today's trading session with short-term tactical cooked, which is another important piece of information and layer of probability that I like to pay attention to. Here's your short-term tactical. The way that I like to utilize short-term tactical as a tool is most of the time it's not in this green and red zone. Most of the time it's somewhere in the middle. When it gets into that green and red zone, it's a notable piece of information. For me, when it's in the green zone, it doesn't mean buy. It doesn't mean close your eyes and buy. For me, it means you probably shouldn't short. You probably have a pretty bad risk reward on shorting. And then the opposite when you're in the red. When you're in the red, it doesn't mean short. It just means probably don't buy. You're probably going to have a really hard time buying. Now, one thing that we also noted in today's morning meeting is that when short-term tactical gets into one of these more extreme zones, it's actually not that unusual to see it stay in that zone sometimes for a couple of days. A lot of times it's just a quick one-day phenomenon like this was on the upside however many days ago this was. But sometimes you can see this stay or even become more extended down or up and have it stay in that zone for 2 or 3 days. This one was interesting coming into today because it was very deep in that green zone. It was very, very deep in that green zone. You usually don't get it quite that deep, especially on the day one it's there. Sometimes you get like 2 or 3 days maybe in the green zone, but the first day was like barely in it, kind of like this day was in the red, and the second day it's a little bit further, and the third day it's a little bit further, and then you're out of it. I'm trying to remember, Pat, I don't know if you know off the top of your head if you've ever seen short-term tactical in the green zone or in the red zone for more than 3 days at a time. I don't recall ever seeing it in that zone more than 3 days at a time. But we've definitely seen it on a few occasions be in that zone for 3 days at a time. Now, usually what happens on the short time frame, right? This is a short-term tactical sentiment tool. Pat's saying maybe 4, but not more. Usually what happens, so this is the small time frame. This is like a smaller time frame the way the short-term tactical works than like the $10 plus of extension works that I was talking about with daily charts. This can be satisfied very quickly through time or through price intraday within half a day. If you get the Qs basically trading around the flat mark between 9:30 and 1 o'clock, and I've never been able to see like a real-time update on that short-term tactical, but I'm pretty confident that if you just get sideways price action for it's probably correlated to the S&P, but if you get sideways price action from 9:30 to like 1 o'clock, it's almost definitely out of that red zone. And then what can happen is if you're going to get a day two to the downside, if you're going to get short-term tactical in the green for more than 1 day in a row, you get a sell-off that comes in the afternoon session. So you spent the entire morning tactically, the market's moving sideways or it's bouncing or whatever. It's usually what happens when you've got that short-term tactical that cooked. But then if you're going to get it still cooked to the downside again the next day, it's going to probably be because the market corrected through time and through price in the beginning of the day and then got really weak and rolled over. The fear trade came back into the close. We close weak, we close at lows. Next morning, short-term tactical is back in that zone, and then you can potentially kind of rinse and repeat the process. That's all the information that we have coming into today's trading session. So I'm looking in the morning meeting at short-term tactical in that green zone and knowing what it means. At the same time, I'm seeing the SPY is $8.50 extended. I'm seeing the Qs. I'm trying to remember where we were at the open. Like, I think still like $12 extended, if I'm remembering correctly. So basically still in extreme extension zone. And I'm saying to myself, but the flip side is that yesterday was only a day one. And to me, that's the biggest concern. Because the other thing that you have to do sometimes with these market moves is kind of have a day count. And that was actually something, if anyone watched when I did that thing with Scott Rudler and David Prince like a week and a half ago or whatever, I was trying to explain something, and then Scott, jumped in and kind of explained it in a different way about kind of counting days and the importance of counting days. That's kind of what he was talking about, where a lot of the times with these moves, they're usually not one-day moves. They're usually like, at least 2-day moves, but more often like 3 or 4-day moves. And as I have this QQQ chart in front of me, I just see some down moves here that tell you that exact same thing. I mean, we literally just had this happen in July here, where on July 17th we got to like $10 worth of extension. The next day we gapped up. It satisfied that extension. We sold off. We closed back at extreme extension. The next morning we were flat. I think that was a Friday. That was last Friday. We chopped around. It was boring for most of the day. Then we closed week. Bam, now I got 3 down days in a row. Day 4 we get the bounce. So that's why a lot of times on the day 3 or on the day 4 especially is when we're really also looking for the bigger bounce. So that's what I was saying in the morning meeting today, was I would have even significantly more conviction on looking for the bigger bounce trade if today was like a day 3, but today was a day 2. So in some ways you can view it all as layers of probability. I'm viewing the market's extension, $10 plus extended, combined with a short-term tactical, combined with it being a day 3, day 4. Now I'm starting to look at like almost like an A+ style mean reversion trade where I want to come in on the other side of the trade, because all of those pieces of information are starting to come together. Today we had the extreme extension, we had short-term tactical in the green, but it was only day 2. So that's tricky. So that's why the game plan that I tried to lay out in the meeting this morning was, let's look for an early bounce in the market, or for the market to move sideways for the first half of the day, and then beware of an afternoon sell-off. Because that's oftentimes what happens when you can combine the fact that it's only a day 2 with having that short-term tactical in the green. You spend the first half of the day somehow satisfying that short-term tactical being extended into the green, but then you're also going to satisfy the market by giving a day 2 by then having that afternoon rollover. That's probably the highest probability situation. Now, instead what happened this morning is we had this extreme continuation of a sell-off in the SPYs and the Qs early on today, particularly the Qs, which was just wild. This sell-off here, in the beginning of the day, I'm like, all right, market's chopping around, but it's not really doing too much. The IWM, of course, is showing its relative strength because the rotation trade is actually still there. It's still intact. And then at 9:50, which is still very early, that's why I was emphasizing just how early in the day this move was. Like, if this move came into the close, I would not have been surprised at all. And guess what? It basically did. Last half hour of the day, it basically did. It basically came into the close. I'm not surprised to see that at all. But seeing this move happen at 9:45 or begin at 9:45, when again you have that short-term tactical that's completely cooked, and you've got $12 plus of extension in the Qs on the daily chart, and it's happening in the beginning of the day, that's quite rare, and in my opinion couldn't last. It didn't necessarily make for an easy trade, but it couldn't last. So they just wrecked this market down. And in my head, though, with an understanding of everything that we're talking about, I'm saying I gotta find the buy signal in this. This is actually, in some ways, they almost felt like more panic than any point we saw in 2022. Remember back in 2022, everyone was like, there was never capitulation. There was never the capitulation trade. Everyone wanted the extreme capitulation trade. This was like a short time frame capitulation here. With the volume increasing, would have been nice if the volume was even bigger. But this sell-off was violent. We also want to combine our multiple time frames like we always do. And what do we know at 10:10 in the morning? At 10:10, really when you get to like 10:15 to 10:30, it becomes difficult to maintain 15-minute extension. Those same extension rules we were just describing on the daily chart also apply on 5 and 15-minute charts. At 10:15 to 10:30, it becomes difficult to maintain 15-minute chart extension. And yes, by 10:15 we were, 10 a.m. to 10:15 candle, very extended on the 15-minute chart. But we were even extended on the 5-minute chart at 10 after 10. So, you look at that, you understand time frames, and for me, I'm saying to myself, I gotta buy. I gotta buy. Everything is telling me that this market has an extremely high probability of giving me a real bounce. That short-term tactical, which I said was cooked coming into today, usually needs at least half a day of price and time correction to satisfy that. I mean, I feel like, again, if you could see this in real time, this thing would have been literally off the page by 10 a.m. the way that we were selling that morning and this morning and giving continuation. I've got that in my mind. I've got the 5-minute chart extension at this time of day in conjunction with the 15-minute chart extension at this time of day, in conjunction with the daily chart extension broadly with where we're at in my head. And yes, look, you still have to manage your risk. You still have to recognize that in markets, anything that can happen will happen. With a big enough of a time horizon, anything that can happen will happen. You could get a flash crash. You could get the crash in 1987. You could get like those COVID-style crashes that we had. But also keep in mind that this is also happening with no real news. There's no real new news that's coming out. All right, we had GDP this morning. That didn't even really seem like a negative. It helped the IWM. This is because Google reported a good earnings report. Yeah, I'm bearish on these Mag 7 companies. I'm bearish on their earnings reports. This is what I'm looking for. But at the same time, it's like, does it call for us to be selling this hard, this fast? And again, of course, keep in mind that there's a lot of forced selling that's going on at the same time. But even with all that, I'm saying to myself at that point in time, I've got to buy. So, I was piecing in on the downside into this move. It did get a bit painful at a certain point because I was swinging some TQQQ long from yesterday. So this was me just adding and adding and adding. But at the same time, as I was getting heavy there, I was saying to myself, I also need like a signal to take like a really big additional buy on top of all the more incremental buying that I'm doing. So you get this doji that comes in, you put in this low, and for me, I was specifically trading the TQQQ. TQQQ puts in this low at 62.13, starts to bounce. So in addition to my other buying that I had been doing, I took like a really, really big add-on buy at 62.44, and whereas I'm usually, incrementally selling on the way up, I was like, I'm not selling any of this. I'm not selling any of this. Like, this is such an extreme situation here. I don't really want to sell any of this until we get to the ADMA. I did wimp out and take one sale at $63, and then really my next sale was at the ADMA on the 5-minute chart, and then I went back to just my incremental selling, and then as we approached QQQ 465 here that first time, which I viewed as a little bit of an important level, and at that point you're like only $10 extended, or at that point probably a little bit more than $10 extended, so it's like you're getting to the zone where you're almost not extremely extended anymore. I was like, all right, that's enough for me on this trade, because I am actually still technically big picture bearish on this market. We talk about this all the time, right? It's a combination of understanding your thought process, your thesis, how you want to be positioned in the market, but also understanding like these extension rules, because I can tell you for sure when you get this much of a move, I would rather be buying stock at 456 today than selling stock at 456 today. But I don't really want to be on the long side of the trade. I was like, all right, we're back to this like 465. We're like only around $10 of extension at this point in time. And then I started like really dumping out a lot more on my stock. I got down to just having like 1/8 of my position left. Then we caught this final move higher. I sold even more into it. Just had a very little bit left, and then I actually stopped myself out on the way down when kind of this little consolidation broke. So that was all perfect. Where I made a mistake, and it was actually a stupid mistake. Honestly, what happened was the chart that I was looking at. This happened to me in the past, but it's very, very rare. So I use this 8-21 EMA as a tool. If I accidentally click on the moving average, if I accidentally click on it, it changes the moving average to different prices. I must have accidentally clicked on my chart and changed my moving average, and I was looking at the QQQs selling off here into like this 462 area, and because I had actually done that, I thought we were way more downside extended than we actually were. So this was my big mistake of the day, and I definitely paid for it into the close a little bit. Where again, I had this whole thought process and thesis that I laid out to everybody in the morning that today's a day 2. It don't be surprised if we see selling into the close. And then at like 3 o'clock today, I'm looking at my chart and I'm going, oh wow, we're actually way more extended than I thought than I thought we were. So you know what? I'll actually buy some Qs back now at this point and kind of resume my trade because we're way more extended. And it turned out I had accidentally moved my moving average, and that was a mistake. In hindsight, I would not have rebought the Qs today, and I would not be holding them overnight. I would not be holding them into the close here. But at the same time, now I'm in the position. The market's swung very hard in the close. I feel like I kind of need to maintain the position a little bit and try to manage it, especially because now tomorrow is technically that day 3, and we're back here at the close of once again having $17 or something like that of extension, right? We're at the EDMA here in the Qs is at 475, just under 475. The market right now is trading at 458. So we have got so 62 would be 12. Yeah, we got like $16-17 worth of extension away from this ADMA. The difference for tomorrow is that tomorrow's a day 3. So I'm like, all right, at this point I made the mistake. I realized it a little bit too late. So now I feel like I have to manage the position properly. I'm not going to dump this into the close when we're $17 extended again, and we finally got the full day 2. And because we closed so weak, I'm going to assume, we'll see in the morning, I'm going to assume that short-term tactical is going to be cooked in the green zone again tomorrow, which means same game plan for tomorrow. Same game plan applies for tomorrow, except with the added layer of probability that tomorrow's day 3. But it's a little bit difficult to assess that because we have to see how we gap tomorrow, and then we also have PCE, which can throw a little bit of a whammy into things. Though PCE tends to not be nearly as market moving as the CPI does. I'm not expecting an insane move off of it unless it's something dramatic. We now really need to assess how we gap, because that moving average, we're $17 extended at the close. Moving average is going to draw down more tomorrow. So if we were to open up flat tomorrow, I'm guessing we would be $13 extended, something like that, instead of 17, maybe 12, which then gives you less room on that balance, but still potentially a lot of room. A couple other factors to keep in mind: not only the PCE, tomorrow's a Friday. Sometimes when you start having these bigger sells, the market gets nervous to take risk on the Friday because they don't want to have the risk into the weekend. So it's another piece of information to keep in mind in the back of our head. We could also see some margin calls, especially tomorrow morning. So that could create a little bit of a balancing effect in the beginning of the day where there's some forced selling that's coming into the market, and at the same time, there's other people like me that are trying to buy the market because of the extensions that maybe can even it out, and then maybe after 11 o'clock, we can get a little bit of a bigger bounce or something like that. Hard to say. This is why I always prefer to do that type of research in the morning, because I can kind of get a better grasp on it based on what are the moving at, what's the update on where these moving averages are, how extended are we, how are we set the gap, what's the new news, what's the PCE, what are the earnings reports, all that additional data that we'll be able to assess in the morning. So the Qs and trading the Qs were a big focus of mine. I traded an absolute boatload of the TQQQ. The IWM looks great. the Russell got once again the benefit of the rotation trade. We for an hour and 45 minutes yesterday, we saw correlations increase when the IWM rolled over after 215, and then today once again, it was sell the Qs and buy the IWM. It was just an unwinding of this pain trade where they've been under-owned and short small caps and mid caps and growth and those stocks, and over-owned on the Mag 7, and they're unwinding both sides of that trade. And the Russell just continues to look great here as the Qs kind of sell off. The interesting thing will be if, and it's definitely an if we get the bounce in the Qs tomorrow, what does the IWM do with it? The IWM was so strong today that it was like, honestly, it was like when the Qs were moving higher, when the Qs were moving lower, the IWM was moving higher because the rotation trade was in play. But then when the Qs were bouncing, it was like the IWM was still kind of moving higher because the Qs are just bouncing and they're oversold, and the IWM was just kind of continuing to get bought a little bit because the Russell on its daily chart it's $2 extended to the upside, and with the Russell, that extreme extension comes in more at like 7 because it's a cheaper priced index ETF than the other ones are. Crazy day, crazy couple days, crazy week and a half at this point. Love it overall. There are points during the day where I'm like pulling my hair out. There's points in the day where I'm like super pumped and excited. It's I'm loving this price action overall. Ever since we got the break higher on that Thursday on the CPI for the IWM, this market just got so exciting. This is so much better than just 3 companies moving higher every day, forcing the Qs to move higher if you're a legit trader. Love it. Whew. All right. Happy to answer any questions anybody has. Glad to hear that you're doing well there, Dennis. Do you step up your review process and archive some of the action and trades? Days like this don't come around that often, and I always feel underprepared. I don't. Honestly, I don't anymore. I definitely suggest that you do. I definitely suggest that traders do. I, for a very, very, very long time, kept extraordinarily detailed journals and statistics and reviews and charts and everything. I'll be honest, and this kind of goes back to the conversation we've had more on trading, on what I do versus what I think the right thing for most people is to do. I think that the right thing for most people to do is to always have a really good review process, and then on days like today, there's so much to learn from this action, there's so much opportunity from this action, that you want to make sure that you're doing extra homework. That's what I advise everyone to do. For myself personally, I just don't. I'm just so honed in my process at this point in time that I don't review in the way that I used to. I know exactly how I'm going to trade today and tomorrow and next week and next month and next year, like almost already, unless the market has a major change. Or if I were to go into more of a bigger slump, then maybe I would start to step up that review process again, because I need to figure out how the market has changed. But I don't do that in the same way anymore, being totally honest. But I suggest that you do. Got through Robles' question from Victor. What point do you start looking for longs on the Q's bigger picture? I'm not sure. I got to take that a little bit more kind of day to day and week to week. Here's actually an interesting thing that I'm starting to think about in the back of my head. I have a bearish outlook based on all the data and information that we know for late summer, and I said it could happen as early as OPEX July, because again, all that gamma became unquenched, and it became unquenched as we were going into Mag 7 earnings reports, which I thought could be a trigger that could sell those names down. And if that were to happen, right after the gamma rolled off, that we could get the beginning of a real sell-off in July. Though honestly, I kind of expected it to be more of a starting point in August through the election. August is still a seasonally weak, very period of time. Um, we've already seen the data. Goldman has plotted out, because it happens every August, that there's going to be outflows from the market in August. If outflows happen in the market, again, think about where those outflows are going to be coming from primarily. If you sell $1 of the S&P, you're selling 29 cents of the top 5 companies and 37 cents of the top 10 companies. That's where the outflow is going to be coming from. So it's very hard to say, knowing that those outflows are going to come, like, we should be getting prepared for, like a bigger picture long to come in the Qs. With that said, one of the things that I'm wondering in this down move is, at what point in this down move does my thesis fulfill itself just ahead of the time that I expected it to, right? One of the reasons why I'm bearish on Mag 7 earnings names is because of the move that they have had into the report. I don't think that Google could sustain a price of $190 into the report unless the report was extremely, extremely good. I don't think that Microsoft can maintain a price of $470 into this report unless this report was extremely, extremely good. Same deal with Apple at $235. Same deal with Nvidia at 130 plus. Same deal with Meta at $540. But guess what? I'm not at Meta $540 anymore. I'm at Meta $440 today. I'm at Apple, not as big of a pullback, but I'm at Apple 215, not Apple 235. I'm at Microsoft 417 instead of 470. So at what point is the thesis and the thought process resolved before those earnings reports even come out now at this point? Is the question that I'm starting to have in my head. Because the degree of an incredible earnings report that Microsoft was going to require to have at 470 in order to go higher, it is not nearly as extreme at 417, right? Like at what point? I've been saying that a good earnings report is not going to be good enough for Mag 7 names. But is that still true at 417? Is it still true at 400? Is it still true at 360? No, of course not. At 360, because it's a crazy number I'm just making up, it'd be the opposite. If Microsoft was down at 360, it'd be the opposite. The only way that it'd be able to go down, it would be if the report was like so extraordinarily, mind-blowingly terrible, and if the report was in line or just okay, probably the stock's going to go up. It kind of becomes the other way on that. And now at this point, Microsoft is almost back down to the 200 day. So that's one thing. Oh my God, I have a bad print in something that's giving me a wild P&L. I wish that was real. Would be the biggest P&L I've ever had. It's not real. I wish. Can I get another print in this stock so that my P&L goes back to something that doesn't make me laugh, so I can focus. So that's actually the other thing that's starting to come into my mind now that the sell-off has become pretty big. Are we at 10% down in the Qs yet? We got to be close. What Qs closed down, what, 1%? So we're probably like 9% down in the Qs. We're almost at a full market correction in the Qs off highs. And those reports haven't even come out yet. So we'll see. I'm sorry I'm rambling because this market's exciting. We'll see on your question there, Victor. For me, it's a price and a time thing. I'm still, even though, as I'm saying, at a certain point in this correction, you can start to think the other way about like these earnings reports. I'm still nervous about just the seasonal weakness of August, about the forced outflows that we're going to probably see in August and the impact that those have on the market. I'm still nervous about the entire election cycle. We've been seeing a lot of these bigger hedging trades coming online. You've seen them from Pat. You've seen them from Bill. You've seen these big, VIX hedge trades that have come online that are dated out through November that are dated out through the election. Every time I've ever dealt with a presidential election over the course of my trading career, they sold the market into the presidential election and then bought it up after. So, my big picture thought process, and obviously we have to take the price action as it comes, because my big picture thought process didn't have a 9% correction coming in by July 25th, even as I became bearish. My big picture thought process is that it's very hard right now to be thinking about like very big picture longs for the Qs until we get through the election cycle. And then I think regardless of who wins, we rally after the election. And then if the market's still up a lot on a percentage basis, we'll be starting to talk about the same things that we talked about last year, which is all the forced flows that come in. November is a very bullish month, and then December tends to be very bullish when the market is already positive into December. There's a lot of forced buy flows that have to happen in November and December, especially when the market's already up on the year. That leads to that effect of the market being even stronger into the end of the year. So obviously talking about what the market's going to do in December is ridiculous, unless you're on CNBC and you're just trying to get views. So like I said, we'll take it as it comes. From Josh: on bad days, do you go home and do more work to reflect on the day and what you possibly did wrong, or do you try to forget about it by drinking and forgetting about the day? I think that while doing trade review is extremely important. So I think part of the answer to this question, Josh, I think depends on where you are in your trading career, how experienced you are. If you're very, very new, it might be better to just be going home and doing more work to reflect. But I actually think for most of us who already really know how to trade, if you have a really bad day and you made mistakes, I think actually the best thing to do is turn it all off. Don't look at the futures. I get this guy, I don't know if you've heard of him, Josh. His name is Joshua Leffler, who loves to text me at like 9:30 at night about some random piece of news that's gonna move the market. And the guy he's very, very dramatic. He's one of the most dramatic people that I know. And I'll get like, I very purposely am like turned off and tuned out, and then this text comes up and it's like, oh my god, like the end of the world just happened and the market's gonna be up and down 5 billion points tomorrow. And I'm like, oh my god, why is this guy messaging me this as I'm trying to go to bed? At least when it happens at midnight, I've got my phone off in silence and I'm asleep. It's when it comes in right before bed. So I think that for most of us who know how to trade, who've been doing this for a while, that if you have a bad day, which happens to all of us, myself included, that probably the best thing to do is turn it off. Don't take your work home with you. Enjoy your night. Have a nice dinner. And then refocus in the morning. Consciously refocus in the morning. I like to use that mantra. I've said it before. Whenever I have a bad day, whenever I didn't trade well, the next morning the way I refocus myself is I just repeat to myself, usually multiple times, all I need to do to be successful today is just to do the right things consistently. And I know that I know what the right things are consistently. It's just that I don't always do them. Right? That's like the hardest part about trading in some ways. Most of the time I do the right things consistently. Every once in a while I don't. And when I don't, I pay the price for it, and I'll be mad at myself and I'll beat myself up, and I think it's okay and fine and normal. But then you have to refocus yourself. It's only human to make mistakes and have a bad day once in a while. You can't let it become a funk that lasts for multiple days or multiple weeks. I also learned from when I was a newer trader, from a guy that was a much bigger, more experienced trader than me, which I think also applies especially to the more experienced guys here. He told me, treat yourself on your really bad days, not on your really good days. You have a really bad day, go out to that really nice restaurant that you've been wanting to go to and you haven't gone to. Or I think what he actually specifically said was, the last time I had a really, really bad day, I went and bought myself a $200,000 Rolex that I was eyeing for a while. Or something like that is specifically what he said. But it was more the idea of like, treat yourself on your bad days, go out and have that, you know, nice dinner when you have a bad day. Make yourself feel good, but don't do it on the really good days. Because the really good days, that's what's supposed to happen. That's what you're here for. That's what your business is. That's your job, is to make good P&L and have those good days. Don't get too happy with yourself on your good days. Don't treat yourself on your good days. Have that just be the normal course of business. Don't get it into your head that you're God's gift to trading. Come back in and the next day just do the right things consistently over time to repeat the success. So, Josh, if you're asking us, you had a tough one, maybe give yourself a nice dinner tonight. Maybe enjoy yourself a little bit. Do what pleasures you. Looks like we got through the wellness check on the person that was having a rough day, and wellness check on the person that was having a rough morning. If you know, if like, I'm assuming you mean like for another trader to give a wellness check, or me or something. Yeah. If you obviously you have to know that the person had a bad day to begin with, but if you have a partner and you know that person had a bad day to begin with, then you want to do that. What? Oh, that guy? No, I don't need to talk to him. He's fine. That's a normal. If you're newer to the VTF, I'm not in the office that often. That's very not unusual for that to happen from the room behind me. Guy is a massive, multi-million-dollar futures trader. It happens sometimes. It happens sometimes. I occasionally, you know, have an outburst once in a while myself, though it's much less often than it used to be. You gotta keep yourself even keeled as much as you can in the business. Or it's one thing to lose control of your emotions. It's something else to act on that. I actually think, again, we're all human. So in this business can be super stressful. The P&L's moving and everything else. I don't think that there's necessarily anything wrong with losing control of your emotions occasionally. The problem is if you act on it, if you start trading off of those feelings, if you start revenge trading or you start doing anything like that, that is then a big problem. So for myself, I definitely still have my share of outbursts. I think Josh and Pat, they've seen me in person sometimes. But it's okay. Just don't let yourself trade on it. Popping over to the YouTube. Kevin G saying super active day today. 2022 vibes, except to the upside. Nice. What are your thoughts on earnings like WM, Waste Management? I didn't even look at the report. Being honest, were they pre-market this morning or after hours yesterday? Out of curiosity. After hours yesterday. I genuinely didn't even look at this report. I don't have any feedback for you on it. 200 looks like a really important support level. Do I ever day trade them? Yeah, sure. I day trade these names sometimes on the earnings reports, sure. I know these blue-collar stocks, logistics, manufacturing, environmental sciences don't have a lot of volatility. Yeah, so there's a lot of stocks that I don't like to trade because they don't move well. But if I ever do trade them, it's because it's an earnings report. That's when there'll be day trading opportunity. From you, Vixie Bull. When reviewing daily chart candles, like with the Qs today, do you keep in mind how the candle was formed at all? If I can, yeah. For example, we made the new low very early in the session today, and then we went green, and then we ended red and rolled down. Yeah, I do as much as I can, because I do think that the way that the candle was formed has an impact, and it's not just the shape of the candle itself. But all we can do is go off what we have. PCE numbers will likely be determinant of direction. I don't disagree with that either. All right. Looks like we got through everything. It's just after 5 o'clock. I'll wrap it up there. Hope everybody had an okay day today. This market's been wild. You know, there's a lot of opportunity. There's also a lot of risk. You know, it like a lot of these days can be crazy because like you could have one of your best days, you could have one of your worst days, you could have one of your best days while the guy next to you is having one of his worst days, even if you're both good traders. Like that happens on these days. Overall, though, there's a lot of opportunity in them, so you want to learn to make sure that you can take advantage of it. You want to make sure that you've got good trading rules and risk management rules in place. The risk management rules will save your butt, and then, you know, you want to understand all the layers of probability and everything that we talked about in today's afternoon meeting. So have a great night, everybody. Yes, that's right, Robert. I'll see you then. Have a great night, everybody. See you tomorrow morning.